You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Because if you take a look at basically at what they're trading at in relation to the price to gold and what I expect to happen in the future once the gold price finally has a floor at $2,000 an ounce as opposed to a 12-year ceiling, all it's going to take is just for a handful of these things to take off, and we're going to do really well.
Welcome back to Mining Stock Education. I'm your host, Bill Power, speaking today with my friend David Erfle from JuniorMinerJunkie.com. David, welcome back onto the show. You've been down with a little health issue in the last few weeks. Could we start with you giving an update of what was going on with your health issue? You missed a couple writings on Friday.
Yeah. In the middle of July, I had a really bad pain in my side over the weekend, and I thought it was appendicitis, and I went to the emergency room, and sure enough, it was. And but while I was waiting for a laparoscopic appendectomy, my appendix burst. So it was a lot. It turned out to be a lot worse than I expected. So I was in the hospital for about a week. But I'm on the right road to recovery now, and back up to my traditional hiking 2 to 3 miles a day, and I'm getting stronger every day. So doing a lot better. Thanks for asking.
Definitely, Dave. Well, we appreciate your commentary, and I'm glad you're feeling better. Inflation is the word of this week, isn't it? Are they going to raise rates? Are they going to stay where they're at? I've heard different Fed people talking, and it seems like there's some conflicts even within the Fed, huh?
Yeah, well, we're about to find out. We're going to get the inflation statistics. We're going to get the CPI on Thursday, and then we're going to get the PPI on Friday. But while I was dealing with these health issues, we had some interesting things happening in the market. But as far as the gold price is concerned, it's really held up well. The last Friday in July, we had the August futures contract roll over into the December futures contract, and you had a lot of investors buying December futures. So that automatically put a 2% premium in the futures price over the spot price. So by the following Monday, July 31st, when we had a monthly close in gold futures actually closed above $2,000 for the first time in history. It closed at, I think it was $2,009. Then as the calendar turned to August, the very next day, we had really strong jobs numbers come out. We had a strong dollar as a result of that, higher treasury yields, and the gold price got knocked back down. And what was starting to look very bullish as far as a monthly close is concerned, now we've got the silver price and the miners showing relative weakness to the gold price as the calendar turned to August. In July, we had everything kind of going for us, where we had the silver price and the miners, which generally trade together, were leading the gold price higher. That's not the case now. In August, we had really strong ADP numbers and JOLTS numbers, but then the NFP came out, the non-farm payrolls report came out, and it disappointed a little bit. It kind of stabilized the gold price last Friday. And then also, we had that Fitch credit rating downgrade, which kind of got lost in the shuffle. Gold really didn't react that much to it, but we had the miners and silver selling off. And even with the stock market too, we get the stock market rolling over a little bit here because people are starting to worry about the banking crisis again and the Fitch downgrade. And what do we have happening this week after the Fitch downgrade is we had Moody's come in and downgrade some regional banks credit rating. So, we had credit ratings of several small and mid-sized U.S. banks on Monday get downgraded, and they also mentioned that they're probably going to downgrade the nation's biggest one. When the politicians couldn't really decide on a debt ceiling, they just eliminated it altogether. Now we have no debt ceiling, and now we've got all this debt. We've got now $31.6 trillion national debt now with no debt ceiling. We've got the Federal Reserve, who continues to raise rates. Now we've got a Fed funds rate at 5.5% now, and that's the highest level we've seen in over 22 years. If the Fed continues to hike, it increases the odds of debt crisis becoming the next big black swan event. And that's what Fitch sees, obviously. That's what Moody's sees, obviously. So Moody's also mentioned that, hey, there's going to be a recession. So, we got to downgrade these banks now and put out this warning, because if the if these central banks continue to raise interest rates, combined globally, these global central banks have raised, almost 4,000 basis points the last 17 months as this higher than expected inflation continues. As far as I'm concerned, I refuse to believe that the world's major central banks continue to raise rates at the fastest pace in over 40 years without breaking something. And now Fitch and Moody's has come out and basically agreed with me. So the gold price is still reacting to what the Fed might do in September in possibly raising interest rates again. But like I said, if they do, it's just going to create more cracks in the system.
So how are you positioned, or how does this analysis affect your current holdings in the junior miners? It's been be right and sit tight for quite some time. Is that still the message, Dave?
It's just incredible. I've been in this sector, as you know, for 20 years. Back in 2003, when I discovered the sector, I discovered a little late. I was a little late to the party, because the gold price had double bottomed, at 250 in 2001. And by the way, at that time, the national debt was only $6 trillion. And now we've got basically interest rate payments that are almost $1 trillion alone. 70% of the national debt is basically interest payments on the debt. But I digress here. As far as the juniors are concerned, back in 2003, when I discovered the sector, we already had this huge move, and it was consolidating that huge move. And at that time, $500 was the price that everybody was watching. Boy, if we could just get over $500 an ounce, the gold price and the mining sector is really going to take off. As you know, I did something crazy. I sold my house that I was, restoring myself. I did all this work and made all this money and put all the money into juniors, and got really fortunate. And when I did it, because I did it in the middle of 2005, and it was just a few months after that I put all this money into juniors, that the gold price finally cleared $500 an ounce. And we had that monthly close of $500 an ounce. It really didn't look back until it hit $1,000 an ounce by late 2007. And I was feeling really cocky, and I made all this money. I tripled my portfolio of juniors. If I knew then what I know now, I probably would have went up 5 or 6 times. But anyway, but the one thing that I have always held true to is basically risk management, meaning that anytime I make even $1 on a junior, I take my realized capital gains out of the portfolio. In other words, I never reinvest profits into juniors, because I know it's cyclical. I know it can go down just as fast as it can go up. Profits are very hard earned, and they're not only hard earned, but they're hard to keep in this sector. So I always take them out. I started with a really high number when I sold my house of $475,000 to invest in juniors, which is, at the time was a lot of money for me. It was most of my savings. So all that money that I made, I'd taken out. And then 2008 rolls around, and the same thing happened. I started accumulating juniors early this time, probably too early. And ever since then, I have started a bit too early, but I'd rather start early because, I know that I've learned that you don't chase gold stocks in this environment, especially juniors in this sector. It's cyclical, and you have to buy weakness and you have to sell strength, not the other way around. So, buying low and buying low and buying low is the way to make money. You don't buy low to sell low. So I've been accumulating again for the past year or so, and my subscribers have been accumulating along with me, and we're holding. And we're down on a lot of these things, but as far as selling, it doesn't make any sense to sell, because a lot of these companies, I've got very strong relationships with a lot of these management teams, a lot of these companies that I've been invested in the past, where they're de-risking the same projects, or they maybe moved on to another project they're de-risking after making me a lot of money in a previous company. So, I have a lot of faith in these management teams. I have a lot of faith in their projects. And there's, they've got these multi-million ounce projects now that that they've de-risked to the feasibility stage or the finance stage, or some of them are even at shovel ready stage. Yet the stock is trading at a fraction of the cost it was trading at when they were just maybe at the pre-feasibility stage or at the PEA stage on the same project, and the gold price was even lower than it is now. So I know that all we have to do is have a lot of patience, don't trade on margin, and you don't get caught up with these big down days. Because if you take a look at basically at what they're trading at in relation to the price of gold, and what I expect to happen in the future once the gold price finally has a floor at $2,000 dollars an ounce, as opposed to a 12-year ceiling, all it's going to take is just for a handful of these things to take off, and we're going to do really well.
Dave, you hold some definitive feasibility stage projects or companies within your portfolio. If one of those makes a positive construction decision, which can take 12 to 18 months, you'll hold them through that build out, even though there's been so many mine failures in the last couple of years?
Oh, absolutely. But you have to keep on top of what they're doing while you're doing it. Like I said, it goes back to track record with these management teams. Like I said, a lot of them have made me money in the past, so it gives me more confidence. I'm holding them. But yes, I understand. Everybody understands that, the gold price has been bumping up against $2,000 here the past 3 years. But while it's been doing that, all these juniors have had to dilute their stock to raise money to de-risk projects while having no cash flow, while everything that to get the gold out of the ground, to explore for it, to build the mine, everything has gone up, 30-40% to basically, service the project. So we all understand what's happening, and it's just have to continue to be patient. These bottoms that happen in these mining cycles, you've heard me say it before, every 7 years, gold stocks bottom. And gold stocks bottomed, 11 months ago in September of last year. GDX and GDXJ bottom, they're still trading at 35-40% higher than that. Yet the juniors, a lot of them have gone lower than where they bottomed back. That's the great thing about what's happening right now. You could take the time to do the proper research, be in the right companies. If you're holding the wrong company by the time this sector finally bottoms, because you've got all this time to do this research, or even invest in a newsletter like mine that'll help you do the proper research on this, make sure you're holding. Because what's happening now is there's these quality companies. The quality companies have access to capital, but the companies that are trying to de-risk marginal projects, or lifestyle companies, those are the lights being shined on those companies right now. That they can't raise capital. They have to offer a full warrant with bad terms to raise the capital. They can only raise a certain amount of capital. They can't raise a proper amount of capital, to do the proper amount of work on the project that they have. That tells you a lot about what the market thinks about their project. There's all these companies that are really cheap right now, that are the right ones to hold. They've done the right things. The management teams have done all the right things. They've raised the money at the right prices. They've made sure that they minimize dilution, because they're also holding a large position in the stock as well. They put their money into the finance. Each financing, they participate as well. That tells me a lot about the project and the management team are doing that. So you've got all these signs that you can pay attention to. Make sure that you're holding the right companies right now.
Dave, Snowline Gold is putting out some eye-popping numbers, amazing gold grades for hundreds of meters from surface. Last time I checked, they were about an $800 million Canadian market cap. Now, we've seen this with Newfound Gold, where they get to be a multi-billion-dollar market cap. You made a ton of money off of Novo Resources and the expectation and the promotion surrounding that. So my question to you is this: at what point is too big enough to where it reaches, you started at a $20 million market cap, and now it's at a $400 million market cap. My wife asked me questions like this. Bill, is that enough?
Yeah, well, luckily for us, as far as Novo was concerned, we held on for quite a while and we got out near the top. We got lucky. It's difficult because, the greed factor sets in, right? But it's difficult, there's not much.
And then they tell you, what about Great Bear, Bill? But what about Great Bear? If you sold at $800 million, it went to $2 billion.
I know. And the funny thing is they sold that without a resource. They never did a resource. So, Kinross ended up doing the resource a few months later. They found out they paid a lot more per ounce in the ground than they expected. But, yeah, I mean, it's funny. There's that greed factor, but, there's so many people right now that are desperate for a win that, if they get 3-4 times their money, it doesn't matter, what the future of the stock looks like, they're going to take it. But, it all depends on, how much money you have in the stock, how much volatility you can stomach. I mean, there's not that many of these drill plays that are having these kinds of successes. I mean, you can count them on one hand. And the Yukon is famous for having these huge wins and these huge misses because, it's a seasonality factor. You can only drill 5 months out of the year. The government's really slow in getting things done. So I've had a couple of major wins in the Yukon, but I've had more misses in the Yukon than I've had wins. But I always know to cut my losses early. But the biggest win I had there was Kaminak several years ago. I had a big win early with Alexco, but I ended up getting into it later and basically not making very much money or even losing a little money on it when they had a run of bad luck when COVID hit that they ended up going under and basically having ECLA take it out. So, there's big wins and big misses in some of these jurisdictions. And we have the same thing in Red Lake, right? You have these big wins like Great Bear and, basically a mine that started Goldcorp being one of the largest major mining companies in the world was started by its mine in Red Lake. You've also had a couple of big misses with Rubicon and with recently here with Pure Gold's Madsen. So you still got to do your due diligence. You can't just pick a jurisdiction and say, wow, look at this stock, it's doing really well in this jurisdiction. Look at this project, it's right next door, it's nearby. I think I'm going to get into this because there's probably a good chance that it can really do because it's in the same area. You got to do a lot more due diligence.
Dave, if one of your growth-oriented producers or one of your developers is taken over before the end of the year and the gold price doesn't take off, would that be a disappointment to you? You did the due diligence and you get a piddly return.
If you'd have asked me that question last year, I'd have said yes. But this year, I'm going to say no. I'm going to be really happy if something gets taken out here at 2 or 3 times what I paid for it. Because
but I don't think they'll pay up that much, do you? I don't think they'll pay.
Well, it all depends on what it is. I've got a company that I'm invested in, that I've been invested in a while. I think there's a really good chance that it's going to get taken over pretty soon. And I think that it has a chance of returning at least 3 times of what my original cost is and my subscriber's original cost is. I think that's a possibility. But if it's even less than that, I'd probably still be happy at this point because, it's nice to have a win right now. I've got positions in 21 companies that I feel have huge upside potential in the next 2 to 3 years. And if one of them gets taken out too early and I only make 2 or 3 times my money on it, I'm not going to.
Well, Dave, thanks for coming back on the show and sharing your insights. I think you would agree with me that one's personal health is even more important than our financial wealth. So
absolutely,
I'm glad you have financial wealth, Dave, but more importantly, I'm glad you have your personal health. So we wish you the best on your recovery.
Thank you very much, Bill. It's always great talking to you, and it's always great hearing from the people who listen to these podcasts. I always get really great questions from people, and you have a really knowledgeable audience, and it's always a pleasure to speak with you.